Recent data showed Eurozone industrial production and German CPI data both came in lower than expected. However, Eurozone GDP data out tomorrow is expected to stay the same at 0.8%. Joining me on the line to discuss the future outlook for Eurozone economic growth is Jennifer Mc Keown from Capital Economics. Now, Jennifer, what are your expectations for tomorrow's GDP data and what are your reasons behind the prediction?
I think, like the market, expect a 0.2% increase in Eurozone GDP. That would be in the fourth quarter. That would be the same as the outturn in the third quarter. Obviously, a very weak rate of expansion that would do very little to erode the spare capacity in the economy. The industrial production figures were slightly disappointing. Industrial production was stagnant compared to the previous month in December. But that's not much weaker than the consensus forecast. Over the quarter as a whole, in Q4, production actually rose by 0.3%, which easily beat Q3's 0.4% fall. So on the face of it, that might mean that GDP growth could actually be stronger in the fourth quarter than in the third quarter. At the same time, though, we've seen indications that growth has been slowing in the service sector, most notably from the business surveys. So I think those two things together imply that the overall economy will have performed similarly to its performance in the third quarter.
And what can markets expect in a few months down the line in terms of Eurozone economic growth?
Well, we're obviously in a period of massive uncertainty at the moment, and a lot depends on how the Greek situation moves from here on. So far, it seems like we're no closer to a deal at all. The authorities yesterday were unable even to agree on the next steps towards coming to some kind of an agreement that would allow Greece to continue to meet its obligations and ultimately stay in the Eurozone. So I think at this point there's a real risk that Greece will end up having to exit the Eurozone, which would of course imply a lot of financial market turmoil and economic turmoil too, perhaps sharp falls in business and consumer sentiment, which would mean which would bode very ill for the Eurozone economy, not just for the Greek economy. Our assumption at the moment is that some kind of deal is ultimately reached that allows the Eurozone to continue in its current form. But even under that assumption, I don't think the prospects for growth are very bright. Various economic survey indicators still point to only very slow growth in the Eurozone. Of course, the sharp fall in the euro exchange rate is a relatively positive sign, but so far exports don't really seem to be responding to that. And labour markets, of course, are still under a lot of strain. Unemployment is still very high throughout the Eurozone, and that's likely to continue to hold back domestic spending.
Well, thank you very much, Jennifer. That is all from me for today. Join us again tomorrow for more economic news releases, industry catch-ups and exclusive interviews. Bye for now.